Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 20th of March. Starting on with the FTSE 100, where some people may have been caught out by that dive towards 7,200, which came despite the apparent resolution of the Credit Suisse situation. It should have been up rather than down, but we've seen a bounce through the morning and basically a very strong-looking hammer candle there. Bear trap below the old November-December support area at 7,300, and above that looking for, I suppose, the 200-day moving average area, 74.30, and maybe even the high of Friday at 75.10 as a best-case scenario while we're above 7,300. But the overall message here is that in the recent past, whenever the FTSE's gone down to an oversold RSI, i.e. sub 30, that has been a buying opportunity. We saw that back in October, even at the beginning of October as well, with that 200-point bounce. Saw that in September as well. We rallied then from around 7150 to 7500. So one would expect the market to bounce from these levels, especially given the way that on an historic basis the FTSE is still pretty cheap compared to especially the American markets, etc., etc. Like to see an end-of-day close today above 7,300. A real win would be if we can close above the 200-day line. That's currently around 74.30. Moving along to the DAX, which didn't fall as much as the FTSE in relative terms. We're still holding the uptrend line there from October, or just about holding it. Depends exactly where the line is. It could be at a slightly shallower angle, but you can see there that bear trap below 14,700, and above that looking for the 50-day moving average at 15,200. If we can get that over the course of the week, we probably think that we've got off quite lightly in terms of the Credit Suisse sell-off that we've had in the major markets, major indices so far this year. Below 14,500, which we tested this morning, then there's the risk of a move down to 14,000. But at this stage, and also the 200-day moving average area just below it, but at this stage we may have got away with the worst of the sell-off after that bull trap through 15,500 that we had at the beginning of the month, which was an island reversal. So it was a pretty good technical signal, if nothing else. On to the Dow, which one sort of shuts one's eyes at the moment. Here, also at an October uptrend line there, that's around 31,800. Above that, we've got the chance of returning back to the 200-day moving average area at 32,400, and then the major barrier, the 50-day line at 33,300. The failure at the 50-day line and at RSI 50 was the technical reason for the sell-off that we've had so far this month. But at least the first glimmers here of a recovery, and one would expect probably the Dow to be more normal in the sense that it would open bullish today, given that we've had the bear trap in the European markets previously. Star of the show by quite some distance is Bitcoin, and here we were looking for 30,000 or 32,000 now, up to by the end of next month. By the way things are going, we could actually get that by the end of this month, up to 32,000. 32,000, the post-June 2022 resistance, and also that July resistance line projection, top of that triangle from the summer. The upside valid, certainly while we hold above initial March resistance, 26,400, and ideally we stay above 25,000 as a whole, ahead of a move towards 32,000. If you look at the daily chart of Bitcoin, you'll see that above 32,000, the next level up is really actually up to 43,000. So everything hinging on getting to 30 to 32,000 and then building up from there. The overall pattern here, a complicated inverted head and shoulders, a bear trap inverted head and shoulders over the course of November, December, January. And then that final right shoulder was the bear trap, which has given us the rally that we're enjoying now. Both the 50 and 200-day moving averages, both rising now. And that tends to be a decent signal. You see the 200-day line rising there, just underneath that line, that support line there from last year. RSI overbought, but not overly overbought, if that makes any sense. We were much more overbought in January. So a bit of gas in the tank hopefully left for this market, especially above 26,500. Going on to the small caps, and the nice dovetail with Argo blockchain. Here we had a bear trap island reversal back on the 10th of March, and we made good on that unfilled gap to the upside on the right side of that formation, and a rising 50-day moving average as well. That suggests that the longer we stay above the 50-day line at 14 and a quarter pence, the greater the chance of a move up towards the top of this rising trend channel from December, as high as 26 pence by the end of next month. That sounds punchy, but in fact the recovery here has actually started back in December with the Bear Trap Island reversal, and we've really built on that ever since. So it's obviously been rather volatile, especially with that final Bear Trap towards 10 and a quarter pence that we had earlier this month, but looking pretty decent now. We're sort of 50% up on that particular turn, or that particular low that this market had. The other positive is the way that the RSI is now in the mid-50s, so that is in cruising altitude in terms of being a continuation signal for potential upside. If you're cautious, you wait for a break of 16.3 pence, which was the late February resistance before, assuming 20 pence plus is on its way. Onto a stock which has had rather complicated news, but at least with Altona, we've seen the end of that extended bear run that shares have had from 14 pence, broken a line of resistance and the 50-day moving average, 50-day line around 6 pence, and that line just above it, and above 16 pence, looking for as high as 10 and a half or even 11 pence, so that April resistance line projection. We could see that by the end of next month. I know that there's a complicated situation here with the shares leaving Aquis, etc., but at least in terms of what the chart has at the moment, that is a good look, and maybe that will continue going forward. On to Blue Star, which I know has some crypto elements to it, and here it's a third attempt to sustain and break above 20.25 pence. Breaking 30 pence could take us up to 40.4 pence. Breaking 0.3 pence could take us up to 0.4 pence at the top of that rising trend channel from July, as soon as the end of next month. We've got a sharply rising 50-day line, and we've had a bounce of the RSI above the neutral 50 level as well. So that's looking pretty good, even though obviously the share is still trying to take up the slack of sellers previously. We had that big move on the 14th of March. That was a gap closed buy signal, and so far that has worked quite well. And the longer we stay above that point, the sort of the low 0.2s, 0.22, 0.23, the better this chart looks. Keep covering Conroy because it keeps looking good. Here we've got situation. We've got this little bull flag breakout. We had an unfilled gap to the upside off the lows, which was a very strong signal. Basically, that gives you a buy signal on an end of day close above the gap high day, which in this case was around 18 pence, breaking that resistance, and I suppose the entry there towards 20 pence. We're now up to 25 and looking for as high as 36 pence, while we hold above the 200-day moving average at 22 pence. We'd expect things to speed up a bit once the 200-day line goes from falling to flat and then rising, hopefully over the next week or so. Stock which I flagged a few weeks back as potentially move up to 10 or 11 pence if it broke 7.5 pence. That's happened with Hummingbird against a very horrible market, one has to say. We've also broken above the 50-day moving average at 7.6 pence and the 200-day line just above that. So the longer we stay above the 7.6 pence zone, the greater the chance of a move to the top of that rising trend channel from August up to 11 pence, maybe as soon as the end of next month, considering they've been consolidating so long. We've got an uptrend line in the RSI window as well, and the upside looking valid while we hold above 7.25 pence, which is recent support for the shares. KR1 is next. I'd like to look at one or two Aquis stocks if we can, and here we've got a pattern which looks rather similar to that of the one we saw at Blue Star. Final hammer candle off the rising 200-day moving average. So we've got now the 50 and 200-day lines both rising. That's the equivalent of a golden cross. Sometimes that's even better than a golden cross, actually. Break of resistance around 56 pence, which is the initial 2023 resistance, could take us up to that at the top of that broadening triangle from last summer, as high as 80 pence, and that could happen as soon as the end of next month. So looking pretty set fair there for KR1, especially with that break of a resistance line there from February. The longer we can close above that this week, then I think the shares could look pretty good indeed. Upside value buy we hold above recent support around the 45 pence zone. Next stock is one which maybe is not on people's radar. Metals exploration. Here we double bounced off at the rising 50-day moving average around 1.6 pence. Above that, looking for the shares to hit the top of that broadening triangle from last July. In fact, it's July 2021, as high as 2.4 pence. So that could happen over maybe the next 1 to 2 months, maybe by the end of May at the latest. Could be by the end of next month, the way things are going. And we've also got the 200-day moving average rising as well. 1.16 pence and multiple bounces off neutral RSI 50. So metals exploration looking pretty decent at the moment, and I think we had an unfilled gap to the upside there, which remains unfilled while we're above 1.5 pence. So that is an added plus for the stock. Covered Marula yesterday, and there was news from the company today. IG, I think, added their gone up to 4% on this. We've broken, or trying to break, that line of resistance there from back in February. That's around the 8.5 pence level. Above 8.5 pence, looking for 12 pence, as I've said on several occasions before. The plus point here on a charting basis, or plus points actually, are the double bounce off RSI 50 and the bounce above the rising 50-day line. So that should ensure that Marula hits 12 pence by the end of next month at the latest. Obviously, with Bitcoin going up, anything in the space is looking strong at the moment. Here we've got, or had, an unfilled gap to the upside on Friday with online blockchain. 50-day moving average is rising as well. So initial targets here are around 30 pence, which was January resistance. And then maybe by the end of next month up to 40 pence with a fair wind behind it. We had an unfilled gap to the upside. It was a bear trap island reversal back in December, January. So the setup here looking pretty strong, in fact, very strong indeed from a technical perspective. And I suppose the key here is getting through 30 pence and then building on that particular achievement. Going on to Pan-African Resources, and here suspicions that the shares were ready to turn around proved to be correct. We've had bullish divergence, a bear trap as well below 13 pence. Initial target here up to the 50-day line and old September-October support there at 15 3/4. Above that, we could see 19 or 20 pence by the end of next month. Ideally, we stay above 14, which is recent support, in order to do that. And you can see the RSI is pushed above neutral 50. Moving along to back into the tech space and its quantum blockchain, and here another situation where we're pushing through and pushing above a rising 50-day moving average. That's at 1.8 pence. Above that, looking for a June line of resistance from last year as high as 2.6 pence by the end of next month, maybe a bit sooner given the way that we bounced off RSI 50, and that gives extra momentum, as does the bounce above the 200-day moving average in that gap close buy signal that we had on the 13th of March, last Monday. Just a few to go now. First one is Shanta, just to remind us that the gold prices looks like it's finally going to go up and stay up. Here we've broken through a line of resistance from 2-year line of resistance from May 2021 at 11.5 pence. Above that, looking for the shares to accelerate up to 18 pence, maybe as soon as the end of next month. If you're cautious, you wait for the shares to clear the initial 2023 resistance around 12.2 pence, and you want them to stay above 11 pence, which is the 50-day moving average level. Covered Seed Innovations a few days ago. I've covered it twice actually now, but what's looking good here is that the shares have, as anticipated, built on the bullish divergence. They're just crossing that line of resistance there from December, around 2 pence. Above that, initially up to 2.25, which is the 50-day line. Best case scenario by the end of next month, up to 3 pence, which would be decent. I think read somewhere on Twitter that shares really trading at a quarter of their NAV, which even in current market conditions is a bit mean. On to Thor Explorations, which has an update to date. It's actually gapped up. We're looking for the shares to build after they broke that line of resistance from this time last year, around 16.5 pence. They've done that. The 50-day moving average is rising. All that's missing now is for the 200-day line to rise, and for us to clear the initial 2023 resistance at 18.6 pence. Above that, we're looking for an easy 22 pence by the end of next month, and probably or possibly even sooner.